All right, Scotty, what's going on with interest rates, man? Right now, they're a little bit higher, and I have a lot of clients that are still looking. Is there something that a client can do to kind of alleviate the temporary pain of high interest rates if they're still looking to buy right now?
Again, our interest rates, they've hit multi-decade highs. So they're about the highest they've been in about 25 years. They've hit the 8% mark. Although this week we've gotten some good news and we've seen rates start to come down a little bit. So listen, I don't want to count any major wins yet, but we're hopefully seeing a sign of we've reached a peak and now maybe we're going to start projecting towards lower levels. Again, there's a lot of things that got to take place for that to happen. The two primary things, one being inflation, which we've seen inflation coming down. And then secondly, we really need to see the employment sector, the job sector, that's really got to start to slow down. So less jobs, lower employment numbers, lower wages, it just all leads to spending. So we're starting to see some softening in those areas. So hopefully that'll kind of continue here. And then we'll start to see rates start to move lower. And again, the other thing that's going to happen, by the way, is, we've seen in the last year and a half, we've seen the Fed rates 11 times. I think we've seen the Fed, I think we're done. I think we've finally seen the point to where the Fed's going to stop raising rates. I don't really see them cutting rates anytime soon, but there's a possibility maybe, towards the middle part of next year, we might finally start to see some relief with the Fed cutting rates. So,
because the last meeting that just happened a few days ago, it's kind of like the best news we've heard in a while. They didn't say anything. They didn't forecast that they were going to do it. I think sometimes just the conversation of maybe it might happen also shakes up the market a ton.
Correct. So even though they left rates unchanged, they said, okay, we're going to put a pause on it. Correct. A lot of the times they'll talk tough and say, hey, if we continue to see data-driven information that, we're going to see things that where inflation is higher, again, shakiness in the employment sector, right? They'll talk tough and say, hey, we will raise rates one, if not two more times this year. They kind of laid off that rhetoric this time to where the general public and these the bond traders and these hedge funds that basically trade in mortgage-backed securities, they're kind of now hedging their bets and trading in the fact that we've seen the top, we've seen the peak of rates, and now again, I don't think we're going to see any cuts, but yes, I think they've softened their stance to where we might start to see things start to move lower. Now, the only thing I will tell you is where rates go up super quick and overnight, so where those things go up very fast, it takes a lot slower for them to come down. But again, any relief is good right now.
Yeah, I agree. It's funny because earlier this year, I think Jerome Powell said, it's not going to be a soft landing. We're going to come down hard. And I was like, what? Yeah, that shook up a lot of stuff.